Hello, welcome to the Management Channel. In this section, we're going to talk about material requirements planning, called MRP and ERP. Our objectives here is we want to look at how to develop a product structure, learn to build a gross requirement plan, also learn how to build a net requirement plan. We want to look at the concept of lot sizes and take a look at the difference between MRP, open and closed loop, and also learn a little bit about the ERP process. So first of all, what is MRP? Material requirements planning is a dependent demand technique that uses a bill of material, the inventory, the expected customer receipts, and a master production schedule to determine the material requirements needed for that production. What are the benefits of it? Well, you have a better response to customer orders. You have a faster response to any market changes. You have improved utilization of your facilities and your labor. You reduce your inventory levels and costs. And dependent demand is for any product for which a schedule can be established. Dependent demand techniques should be used. Demand for one item is related to the demand for another item. Given a quantity for the end item or the final product, the demand for all parts and components can be calculated through the use of a bill of materials. Effective use of dependent demand inventory model requires the following: a master production schedule, specifications or bill of material and or both, inventory availability, what's on hand right now, any purchase orders that are outstanding, what's the lead time on those supplies coming in, and now we have what's called the master production schedule. The master production schedule schedules and specifies what's to be made and when, and it has to be in accordance with the aggregate production plan, and it requires inputs from both the financial plans, the customer demand, engineering, and supplier performance. As the process moves from planning to execution, each step has to be tested for the feasibility. The MPS is a result of the production planning process. MPS is established in terms of specific products. Scheduled time must be followed for a reasonable length of time, and the MPS is quite often fixed or frozen in the near-term part of the plan. It's a rolling schedule, and it's a statement of what is to be produced, not a forecast of demand. The planning process is pretty much like this, and I'm going to leave this with you for a moment so you can review it. Please pause if you need to. So as you can see, this is an intricate part of the planning process. The aggregate production plan pretty much tells you what has to be built. For instance, and here we see how much has to be built in January, how much has to be built in February. It also specifies what kind, like 240 watt amp, 150 watt amp, 75 watt amp, how many each week to be produced. The bill of materials provides several important items. First, it gives you a list of the components or the ingredients and the materials needed to make a product. It provides product structure. Items above given level are called parents, and the items below a given level are called components or children. So let's look at an example. This is product structure for Awesome A amplifiers. We need, to make one, we need 2 of B and 3 of item C. And then a level 2, you need 2 of item E for the B side, and you need 2 of level E and 2 of level F for the C side. Different component, different size, different dimensions, whatever. So you can see that this is an order for 50 Awesome speaker kits. And given the amount of parts per speaker, you can calculate how much is needed for each final product. Modular bills are not final products, but components that can be assembled into multiple end items. Planning bills or pseudo super bills, are created to assign an artificial parent to the bill of materials, use to group subassemblies to reduce the number of items planned and scheduled, and sometimes used to create standard kits for production. That is, if there are several items grouped together in an assembly that may go into different vehicles. For instance, like in automotive, it might go in this model car and it might go in that model car as well. Phantom bills describe subassemblies that exist only temporarily, and they're part of another assembly but never go into inventory. Low-level coding, an item coded at the lowest level at which it occurs. BOMs are processed one level at a time. Another topic we need to be concerned with is called lead time. Lead time is the time given between taking of an order and the need to produce an order. In manufacturing, it's the order, wait, move, queue, setup, and runtime for each component or product. For purchased items, time between the recognition of a need and when it's actually available for production. So if you're buying a component from your supplier, it may be 1 week, it may be 2 weeks lead time before they're able to get the first components to you. So you have to plan ahead to stagger out your production needs so that you filter in the lead times and get that products in as needed for production. Gross material requirements plan is a schedule that shows the total demand for an item and when it must be ordered from the suppliers, or when production must be started to meet its demand by a particular date. To function properly and accurately, it requires a minimal 99% inventory record accuracy. It has to almost have 100% accuracy for it to work properly. Outstanding purchase orders must accurately reflect the quantities and the schedule of receipts, how much and when it's coming in. An MRP structure is pretty much, you have your bill of materials, your lead times, your inventory data, your purchasing data, all going into the material planning software. And in return, it gives you the outputs, how much you have to build by what date. So let's take a look at a gross requirement plan. You can see here week 1 through week 8, the products that are needed each of those weeks, how much lead time there is. So it helps the system figure out when to order products so that they arrive on time. A net requirement plan is a result of adjusting gross requirements for inventory on hand and scheduled receipts. A planned order receipt is a quantity planned to be received at a future date. The planned order release is a scheduled date for an order to be released. So the logic of net requirements is you have your gross requirements plus your allocations divided by, equaling your total requirements. And then you take that and subtract what's on hand and scheduled receipts for what's coming in, and it gives you your net requirements. MRP management facilitates replanning when changes occur. So we need to consider time fences. That's a means for allowing a segment of the master schedule to be designated as not to be rescheduled. What is pegging? Tracing upward in the bill of materials from the component to the parent item. MRP limitations does not do detailed scheduling plans. It works best in product-focused or repetitive environments, and it requires fixed lead time and infinite size time buckets. What are time buckets? Those are the units and material requirements planning system. Now, what are lot-for-lot techniques or lot sizing techniques? These techniques order just what is required for production based on net requirements. It may not always be feasible. If the setup costs are high, lot-for-lot technique can be very expensive. There's the economic order quantity, expects a known constant demand, and an MRP systems often deal with unknown and variable demand. So you can put a buffer in there. Periodic order quantity Orders quantity needed for a predetermined time period. Interval equals the EOQ divided by the average demand per period. The order quantity is set to cover the interval. The order quantity calculated when the order is released from the customer. Thus, you have no excess inventory. There are extensions of MRP, inventory data to be augmented by other resource variables, such as variables other than just components. Outputs can include scrap, packaging waste, carbon emissions. The data used by purchasing, production scheduling, capacity planning, inventory, warehouse management, so much more. There is a closed loop system that provides feedback to the capacity plan, master production schedule, and production plan so that the planning can be kept valid at all times. A load report is a report showing the resource requirements in a work center for all work currently assigned there, as well as all planned and expected orders. Work can be moved between work centers to smooth the load or bring it within capacity. There are what's called smoothing tactics. Overlapping sends part of the work to following operations before the entire lot is complete. It does help reduce lead time, and there's also operation splitting. Sends the lot to two different machines for the same operation. There's a shorter throughput time, but there is increased setup costs. Order or lot splitting is breaking up the order into smaller lots and running part earlier or later in the schedule, which kind of looks like this. And I'll give you a moment to view this. Pause if you like. Distribution resource planning. It's a time-based stock replenishment plan for all levels of a distribution network, using dependent demand techniques throughout the supply chain, and it has an expected demand or sales forecast that becomes part of the gross requirements. All other levels are computed by the system. The DRP pulls inventory throughout the system, small and frequent replenishments. Enterprise resource planning is now a popular system. It's an information system for identifying and planning the enterprise-wide resources needed to take, make, ship, and account for all customer orders. An extension of that system to tie in customers and suppliers allows automation and integration of many business processes. It shares common databases and business practices, and it produces the information in real time. Coordinates business from the supplier evaluation to customer invoicing. It's a much more pristine system. They have the potential to reduce transaction costs and increase the speed and accuracy of information. It facilitates a strategic emphasis on just-in-time systems and your supply chain integration. But it can be expensive and time-consuming to set up and install. But once it's running, it's much better than MRP. In the service sector, ERP systems have been developed for healthcare, government, retail stores, hotels, and financial services. It's also called Efficient Consumer Response, or ECR. Objective is to tie sales to buying, inventory, logistics, and production. That's it, folks. Thank you for watching. This ends this very confusing material requirements planning section. It's not in depth, and I invite you to look into it further on the internet. Thank you, and have a great day.